Right, welcome to the FP&AI Podcast, where finance meets the future. I'm Roger Knocker, and today I've got two of my colleagues, Anthony Wilson and Donovan Moses. Welcome, guys.
Thanks, Rog.
How's it, Roger?
Yeah.
How's it, Anthony?
You guys doing well?
All good, thank you. Yeah.
So Anthony, Anthony, you're in Mpumalanga, and Donovan, you're in KZ, and I'm in Gauteng. So we're doing like a bit of a roadshow here. Today we're going to be talking a topic which I love, and it's about setting strategic objectives. And you know, when you go into a business and you set strategic objectives, you typically do it at the exco level, and then you break into the different divisions or clusters or BUs. And one of the clusters or one of the divisions, obviously, is finance. So you've got a strategy for your business. You get to the finance department. You do it in HR. You do it in IT. You want that team to come up with a list of strategic objectives. By that we mean 3 to 5 year short sentences that are a little bit aspirational, but set direction. They don't tell you the target. They don't tell you exactly how you're going to measure it. You just want a short verbiage, short couple of words, and it describes the direction that you want to go in. And if we use something like the Balanced Scorecard, which we'll do today, we say, in the financial perspective, and I'm talking to a finance department here, how do we increase shareholder value? Okay, that seems like quite an obvious question, but when you actually think about it, it's not that easy to answer. You as finance, yes, we know the business, we know the top line, we know the bottom line, we know a whole lot of things, but you as the finance division, how do you increase shareholder value? Okay, and in this discussion, you can't talk about IT and HR and that at this stage. Maybe later on we can talk about when we get to internal processes. So that's going to be the first question. And let me kick it off. So I think each one of us will add one objective. So we'll do 3, and then we'll go to the customer perspective and ask the similar question when we get there. So Anthony, if I can ask you maybe just to kick off, how do we increase shareholder value as the finance department? That's your final question.
All right. So I think I'll kick off with the topic of efficiency and how to improve efficiency in the finance department. So we're under increasing pressure to get information out quicker, and in order to achieve that, we do need to make sure that we are efficient in the processes that we're running in the finance department to be able to deliver that information to ourselves and to the rest of the business, to our stakeholders and shareholders. And ultimately, the quicker they get information, the sooner and better the decisions they can make. So, one of the key bottlenecks to that efficiency is the wide use of Excel for that corporate reporting, data gathering, and everything else. And there are so many things that we can do to increase efficiency by bringing in better processes, but also better technology and applications to help us assist with that. So you've got to start from the very beginning of that monthly process that you're running. The first thing that you need to do is you need to get your data. You need to understand the information that's sitting in your ledger, and how quickly can you get that into the tool that you're using to do your month-end reporting, your reconciliations, etc. So your first thing is, can I get to that information quickly and accurately? And to ask yourself the question about how you're doing that at the moment. So is it a manual process or is it an automated process that you're using? The more you can automate, the more efficient you can be, and the more effective your people can be. Getting the data is the first step. It's then what you do with that information when you receive it. How do you make sense of it? How do you complete that? And then how do you finally report it? And again, as I mentioned earlier, a lot of companies use Excel to do that whole process. But if you look at the tool sets that are out there and available to us, they can assist in speeding up their process and also removing the sort of issues and errors that we see coming up time and time again with Excel, which does affect and take away from the efficiency. So there's lots of great tools there that can help you with preparing for that reporting. So doing your account reconciliations, drawing your information in, your consolidation process. There's amazing consolidation tools out there that can automate a lot of that, even right from data integration through doing automated journals within that consolidation, helping you balance that information, report on that information through to your FP&A reporting and analysis. There's great tools and great things you can put in place to help with that efficiency so that, as I say, you're getting reporting out quickly, it's efficient, and you're giving the opportunity for your finance department to also be more effective in that they can have time to understand the data, understand what's happening in the business, and make better decisions around that.
Great. How would you know if you're efficient or not? Is there a key metric? I know we said we didn't want to talk about key metrics, but how would you know that you're efficient or you're inefficient as a finance department?
One of the key quick measures that you can do is always how many days does it take you to close your month? And for me, that's always a great metric. So there's companies that close their month in 3 days. There's others that
they never close.
15 working days. It almost never closes. Exactly. I mean, we talk to companies that are sometimes reporting 3 or 4 months back. So for me, that's a great measure to kind of say where are we as a finance department.
Great. Okay, so you've spoken about efficiency. Let's move on to how do we increase shareholder value? But talk to the effectiveness aspect, Donovan. How can we be more effective? What kind of objectives can we set in that regard?
Yeah, linked to completing your monthly reporting and then reviewing the outputs, i.e. a set of financial statements, one of the key things one would look for is what does the cash flow look like? And being more specific is the operational cash flow. Is the company generating operational cash or vice versa? And I think a key thing to look at is the working capital ratios. Linked to shareholder value is a key thing there is about generating cash and having sufficient cash, especially with the risk and what we're seeing out there in the social economic sphere at the moment, with a whole lot of uncertainty, and companies need cash and shareholders want to see cash. And I think where finance can hone in is looking at their working capital and analyzing their working capital. Typically, a finance team will look at their debtors aging or vendors aging, but often what gets missed, and it becomes also a myth, is inventory. Potentially, inventory can be controlled better, and not just your finished goods or your work in progress, but also looking at consumables, especially in a manufacturing setup where one wants to keep enough of equipment spares and chemicals and the like in the event of. And I think finance can help their engineering partners and their operational manufacturing partners to get better at inventory management. And I think looking at stock aging, but just honing a bit more and understanding what drives better inventory turnover would definitely help in working capital, especially from what I've seen in my career, is that inventory is always a myth in terms of why we're holding so much of inventory.
But are we not stepping on supply chain's toes by looking over and looking at the inventory and saying, well, you've got too much inventory? Where does that accountability start and stop?
I think supply chain's key responsibility is to make sure that the inventory is there at the right quality, at the right price, at the right time. And their metrics often hones in on those items, not necessarily are we overstocking, not necessarily how much of cash are we burning by having so much of inventory versus what else could we do with that. And typically supply chain can sometimes get into a rut in terms of using the same processes that they always did. And I think there's an opportunity for finance to work with supply chain and to show them what they're seeing as a financial ratio, see what is the win-win in terms of getting the supply chain to win on their side, and also not to burn so much of cash and having inventory stay for long periods of time. And I think it differs industry to industry, but it's definitely a requirement where a bit more collaboration between the two can really help drive inventory down. And an example, often people draw items from stores, but are sitting on factory floors for weeks and weeks and weeks, and that can also give you a false positive in your inventory. So finance can dig deep and really partner to improve their working capital insofar as inventory is concerned. I think not enough attention is paid to inventory.
So what I've seen in my experience is that supply chain typically looks in units. They look at the volumes, and they're shipping stuff around, right? And they're storing it, and they tune into the volume, and they sometimes they buy double to stay out of trouble. It's a little saying that the supply chain people use. But they're more worried about being understocked than overstocked. So with the finance hat on, you're more worried about them being overstocked because it's costing cash and interest and all the things that go with holding inventory, the loss and the redundancy, etc.
Yeah.
Right. So thanks, guys. So we've spoken about being efficient, being focused on optimizing working capital. The one I would like to add as a third one in effectiveness is just increasing the operating margin of the business. As finance people, we've actually got to make more money. We've got the resources, and we've been given money, and we've got to go and make some money, right? And there's a few areas that we often pick on. One is look at your customers and look at that they're all profitable, that you're not cross-subsidizing this customer, a good customer for a bad customer, and there's a whole cross-subsidization going on. So finance can play a key role in looking at the activity-based costing models, basically, and seeing who's costing more money to serve and consuming resources, and that's something that finance can do. Another one is, looking at the utilization of assets. If you've got assets that are underutilized, whether they're movable or immovable or people assets, those are key areas that finance can say, hey, we're underutilizing. We're not using the factory to its fullest. We're only using this lease 20% of the time, or we're only using 10% of our software. There's so many opportunities for finance to step in and look for underutilization of assets. And then, of course, when the business has got a strategy, get involved in the pricing, get involved in looking at the future cash flows, look at the projects that are on the table, the strategic projects, make sure they've got a good ROI, a good NPV, and a good payback period. So often when strategy is being executed, people lose the finance focus, and finance is a key partner, I believe, in that process, in helping the business to hunt the right stuff. What you don't necessarily want, it can be done, but often finance is seen, well, they look at the expense claims, and they look at the cell phones, and they look at the meals and that kind of stuff. The big money is actually in the supply chain, in the underutilization of the assets, in the cross-subsidization of customers. Great. So that would be the first question. We've asked from a finance perspective, how does finance create value? The second is, what value do our customers want from us? Okay. And of course, we've got external customers, but for the most part, the internal customer is actually our customer. Our partners around the table, those are our customers, and they're going to be asking, what value do we get from finance? So maybe, Ant, if I can ask you to kick it off again.
One of the key things is that we give them an accurate, consistent set of information or financial information on an ongoing basis. And that also, as we said, with efficiency, also needs to be timely. So we need to get to them in a timely manner. But in terms of accuracy and consistency, that's critical to building trust with the customer, and also creating a conversation that is consistent and ongoing. So accurate, first of all, in terms of accurate information, you want to make sure that when I show my financials today and then I show my financials a couple of weeks later, the numbers are the same. They haven't changed. People aren't looking at different versions of those numbers. So it's essential that you reporting those numbers off a consistent and accurate platform. And it is important, especially in a medium to bigger size business, that platform can't be an Excel or sitting on someone's desktop. It has to be in a system. That is critical, so that it's accessible and it's accurate. And there are a lot of good CPM tools out there that would allow you to do that. They would allow you to get the information right from the ledger into that tool, do what you need to do in the tool in order to get ready for your reporting, and then report it consistently going forward. And the fact that it sits in a system on a database will help you ensure that that accuracy is there. And obviously linked to that is consistency, not just how accurate is the data, but when I report my data, do I report it consistently? So when I report my May financials and then I report my June financials, am I reporting in the same way? Am I applying the same methodology to how I'm reporting it? Do my reports look consistent? Or are things moving around and changing and making it difficult for our business and our customers to understand the information? So that consistency in data and in how we report is so important to build that trust, and to build that ongoing relationship. And then, of course, in order for people to really make good decisions of what we're providing and understand it, that data has to be proven and trustworthy. And I think that's a key thing. As soon as you report something that's wrong, even slightly, you lose that trust. And I think that's important for the finance department to do that well and to do that consistently well.
Finance is often accused of being boring and boring, and they're functional. They put data on the table, they put it on the screen. It's always a spreadsheet, very little color coding, very little visuals. Why is that? Are we not aware of that? And I'm painting everyone with the same broad brush here. I'm included in that. Why do we tend to do that and not make it appealing, and people can just look at a picture? We know a picture is 1,000 words, so why don't we visualize more in finance?
I think it's just the way we taught and what we learn in our career and in our training. As accountants, we're looking at numbers, we're looking at an income statement and a balance sheet and a cash flow, and that's how we understand what's happening, and we look at it like that. And I think that just becomes ingrained into us as finance people. And it's essential that we understand and embrace how other people need to see the data, first of all. So as finance people, we understand an income statement, we understand the balance, we can read it, we can make sense of it, we can make decisions on that. When you're presenting to I want to say non-financial people, but non-qualified financial people, if that makes sense, it is important that we're presenting information to them in a way that they can understand it and make sense of that. And that means bringing into our information delivery not just the income statements and the balance sheets, etc., but we need to bring visuals in. We need to bring graphs in. We've got to bring dashboards into play where people can go in and see what is happening in the business, identify what's happening quickly, and then drill down into the information behind that as needed, so that we quickly picking up things. And I start off with the customers to the finance department, but the same then applies to the finance department. If you've got good visuals and dashboards, you can quickly pick up where things are moving in the business and where you need to focus, as opposed to having to go through all these numbers to try identify what's happening. And that's really what you want. I mean, if we talk about, I spoke about efficiency earlier. That's part of your efficiency, is when you get the information together and you're reporting on it, how quickly and efficiently can I make sense of it to make decisions on that and understand what's happening in the business.
Yeah, not to belabor this point, but I'm going to put both of you on the spot here. In the last 4 weeks, in the month of, let's say the month of July, make it 3 weeks, how many visualization types have you created or worked with yourself? So if you did a pie chart, that's 1. If you did a bar chart, that's 2. How many do you think? Quick gut feel. You don't have to, we're not going to audit you.
Well, it's interesting when I think back over the last 4 weeks. It's probably less than I would think. But probably somewhere around 6 to 8 times.
You've created 6 different visualizations for in the work you do for yourself or for your customers.
Bit of both.
Okay,
So
just
for
for
myself and for customers.
Okay, so you've used about 6. Donovan, how many have you created and worked with?
Yeah, typically over this last month specifically, I would think maybe 1 or 2 to our customers out there.
Yeah.
And I think it's a good question, and one can then analyze the reason. But I think the key thing is also helping the customers on their journey. Sometimes they don't know what they want, or oftentimes they don't know what they want, and it's good that we have good conversations to help them get there, and then then we can get there by understanding the business requirements. I think sometimes there's a bit of lack there, and finance then just gives verbose information and traditional information, like Anthony was saying, typical income statement, balance sheet, etc., that a finance director wants,
Technically right,
but not necessarily the commercial director.
Yeah.
He doesn't want to see income statement, balance sheet. He just wants
He
to see
doesn't
margins
care.
by
She doesn't
customer.
care.
Yeah, he wants to see margins by customer, by SKU. That's nowhere in an ERP. That's linked to what Anthony was saying in the dashboards and the visuals that we're talking about.
I suppose a question we need to ask ourselves as financial professionals in general is, do we know how to visualize data and how to really make sense of data? And it's an important question to ask and almost audit yourself and your department on, because that's also maybe the reason why that doesn't happen often, because we know how to build your financials, but do we know how to analyze and visualize that information in a way that makes sense and tells your audience a story, with that data?
So when I ask that particular question to various audiences, including finance, I typically get the answer about less than 3 chart types I've used in the last 4 weeks. But there are 19 common chart types that we teach our graduates, for instance, and they have to be well versed in all 19 of those: spider charts and funnel charts and tree maps and heat maps, and you name it. There's 19 of them that are quite basic and simple to understand. So it's a bit of a challenge to us to see how many of those 19 we really conversant in and get to understand and how to use them. But let's move on. Thanks for that. So Donovan, in terms of what do our business partners want from us, give me another objective that you think is important.
I think linked to what Anthony was saying, there's an assumption, or rather a reliance or a dependence, that finance is ensuring that the compliance boxes are ticked. So typically, if we look at a commercial executive, he's relying on finance to make sure that the credit applications are completed accurately. We did reasonable checks on the credit worthiness, etc. If a potential customer provided a set of financials, it's the latest, etc. So the commercial executive is concerned on landing new clients, pushing volume, growing the top line, growing margin. And there is a dependence on us to make sure that the back office and the compliance boxes are ticked. And I think that's very key. And what linked to that, and I think how finance can improve on, is time to comply. Often, we're waiting for this from the customer, or we're waiting for that from the customer, or sometimes customer doesn't have it, or this is a customer in a new industry or new market, and we're targeting the informal sector and they don't have this type of information. And then finance is stumped because sometimes the policies and internally are catered for bigger organizations. So often, in being that compliance support, one also needs to think about out of the box and how we can help our organizations be compliant when business environment is changing, and the way we interact with customers are changing, and that's key. And for example, even within other obligations, for example, our HR partners would then rely on us to make sure all payroll obligations are being paid on time per, for example, SARS timing, whether it's PAYE or medical aid, or making sure the pensions are going off, but also that they are accurate. And so that's a reliance there. So if we miss a payment for a weekly wage run, I mean, those employees are going to be devastated. So our partners want to make sure or rely on us that our processes are sound, they're efficient, the back office is running smoothly, there's compliance in check, so that they can focus on driving the business forward. And those are the bedrock that finance needs to cement. And I would venture to say that before we could go into the fancy data visualizations, to make sure that bedrock is sound, that the financial controllership side of the department is sound and also efficient, and not dragging its feet. And there's so many opportunities there.
And there's and there's even opportunities to visualize and automate a lot of those processes. I mean, what's really irritating is when finance sends you an email and says, "Oh, please fill out this form," or they bring you a hard copy form. That would be devastating if they did that. But just even an email where, if we want to respond to workflows and let people capture data on the fly and make sure it's all in and we're compliant. We don't want the tax man knocking on the door and telling us we're not compliant and we have to shut down for a period, or take up management time in dealing with that. So key to what you said. Okay, I'm going to add one and then we can wrap up. So the third thing I think is it's a relationship aspect with our partners, and they actually want us to provide advice and guidance to maximize profit. Okay, they want us to keep the risk thing under control, but they actually want us to help with their pricing, with taking into account all the costs. They make a decision and they haven't factored in the logistics costs or the insurance costs or the processing costs. And just like if I'm in business and I've got a people issue, I want to be able to go to HR and get their guidance and advice, right? If I'm looking for a new system, I'll typically go to IT and say, "Geez, this is what I want to do. Can you help me? Can you guide me?" If I've got a legal issue, I'm going to run down to the legal department. When it comes to profit and cash flow and cost management, we need to be those people, right? That people can run in and say, "Sure, I've got this, whatever situation. There's a million situations. Can you help me? What's the best way to go forward with this thing?" So that being that trusted advisor, and when your CFO or your finance exec says no, you trust that no. It's not, they're just being difficult. There's a good financial calculation that's gone behind that, good experience, and people are looking for that guidance. Anything else from you guys? Otherwise, that's been a great half an hour. And Donovan, any last words, or Ant?
Yeah, I think Roger, you touched on something, or ending off on something that's key, and I think we underplay that sometimes. And most of the time, that trusted advisor does take some time to build. And as finance people, we always say, "Oh, the guys are not accountable. They overspent again. They're not controlling their budgets." But often there's some understanding and there's some context that's also needed. And I think it's a very underplayed point that can sometimes differentiate companies if they get it right, even within the same industry. It can actually give you some good leverage if you get it right. So I just want to add to what you just mentioned.
Awesome. And anything from your side?
Yeah, nothing new, but just to add on that, depending on where you are in your journey as a finance department or finance professional or CFO, there's always a mountain to climb, but you need to sit back and identify where are the bottlenecks in my processes? Where are the things that I need to work on? And start with the essential stuff and build up that foundation. I think we can often want to go from 0 to 100 as quickly as possible, but if you haven't got those foundations right, that final output and that final relationship with your customer and those dashboards are not going to be worthwhile because the other items aren't in place. So it's important to understand where you are on that journey and walk that journey towards getting to that maturity.
Thanks. And so in summary, what we spoke about, how do we increase value, shareholder value? So from a financial perspective, and you said we need to improve efficiency of financial services provided. Donovan, you said we need to optimize working capital. And I said we need to increase margin of the business. Those are 3 financial objectives. Of course, there could be more depending on your context. But then we stepped into the customer perspective, and we said, what value do we offer primarily our internal customers? Normally the external ones are the debtors that we're chasing. But Ant, you said we need accurate, timely, consistent financial information. Donovan, you said we need to manage our transactions, risk and compliance. And I said we need to provide advice and guidance to maximize profit and be that trusted provider. So guys, thanks. It's been great spending the half an hour with you. And thanks for your contribution, and we'll see you next time.
Fantastic.
Cheers.
Thank you guys.
Roger, thanks, man. Cheers, Anthony.
Cheers.
It was a good discussion.